Hi guys and girls. How's it going today? Happy Tuesday, and welcome to the tokenomics call. Looks like we have a little bit more participation than we have in recent weeks, and that's exciting because we have a cool session today, a cool tokenomics jamboree 2022. So yeah, didn't chat with you guys last week because myself and some other foxes were at DevCon in Bogota. This was my fifth DevCon, and I can easily say, like, at least in my humble opinion, this was by far the best. Not just in terms of like venue and logistics, but also like the vibe, the electricity, the atmosphere. You get a sense that the Ethereum space especially, but crypto in general, has hit this critical mass of like smart, awesome people working on cool things. Something else is like at DevCon, like you never hear like about a price discussion. That's true of ETH Denver too, but like nobody cares about we're in a bear market. In fact, I think it just improves the focus for people building. Just a really interesting discussions happening everywhere, really interesting talks. And another highlight was just hanging out with some foxes down there. Had an opportunity to meet Gomes and Vlad. And hang out with Willie Highlander. So we had some other foxes down there. It was just we had a great posse. It kind of reminded me of that scene in Anchorman. Remember, there's like the various like newscast team posses. You know, we were like Channel 5 rocking it, the Shapeshift. So proud to be part of this DAO. It was just phenomenal. So yeah, now it's sort of back to building. One other thing I wanted to highlight, and this is just a quick development that happened today, but there's a new threaded discussion happening in a channel called Dao Strategy. This arose because of some strategic thoughts or strategic conversations we were having in the leadership channel, and it quickly became apparent we had to move that to a public forum. Of course, this is not some smoke-filled room where a few people are determining what happens. This is the opposite of that. It's up to Fox holders to decide the strategy of the DAO. Of course, various workstream leaders have, I think, valuable opinions, and I have already made many of those opinions clear, which is great. But the broader Fox holder community is really responsible for this. So remember, this is a DAO. We are decentralized. So please jump in there and kind of start to ponder this stuff with us, because this is a really good time to be thinking about big picture strategy in the middle of a bear market. Additionally, we have a DAO retreat coming up in December. I think there'll be a lot more details on that coming out soon. So it's a great time to focus. And I think collectively we're really well positioned to do this, because so many great people are here at the DAO. So moving on to the agenda. We have a Runway update here. You'll see that I posted the link there. We have, or in the stage chat, some other stuff as well. But I want to say in advance, please stick around for a little bit longer to hear Ocean talk about his DAO revenue modeling. This is going to be really cool to look at, and really part and parcel of tokenomics and just the DAO's overall strategy. You know, revenue is important. Crypto projects can't rely on up only. You know, we have to think about like how is a DAO going to make money, and what does that look like in user growth. So we're really fortunate to have him presenting on that today. First of all, we'll cover the Runway, Tribe Redemptions, bond update, a quick update on TMDC allocation. So we'll jump right into it there. So turning our attention to the Runway, there's been a material update, or a material sort of change here, an important change that is now factored in. In terms of the stablecoin, remaining stablecoins, this has predictably drawn down. However, you'll notice that whereas before we had 9 months of Runway, we now have 10 and nearly 11 months of Runway, pushing out to almost August of 2023. So you may be wondering, how did that happen? What is the dynamic here? The reason is that the Keep Key workstream has signaled that they will not continue to take or request DAO funds after their current time segment ends as part of the proposal that enacted this. So that was $50K a month of spend. I have prorated that for November because their proposal would end, I believe, in the first or second week of November. I prorated that and then factored in the elimination of that particular line item, and that brings us to a lower monthly budget. You can see the impact that has by extending the runway. I want to give a giant shout out to Highlander and Pasta Ghost for their work so far, not just on Keep Key, which has been invaluable, but both of these guys have been such steadfast and thoughtful contributors to the DAO. And regardless of how things move forward after their proposal ends, I think I don't just speak for myself when I say I hope they really stick around in various ways here at the DAO and doing cool things, and they're just awesome dudes. So that is kind of what's going on with the runway. Check the stage chat real quick. Okay. So I also want to draw your attention to the second tab in the spreadsheet. This is the runway with 150K a month towards bonds. Willie had made a great suggestion prior to DevCon of even though the point of the runway, first and foremost, is to kind of see okay, the worst case scenario, what can we truly count on under worst case conditions? It's also a very good idea to sort of analyze where we are from a more realistic, or I should say current conditions. If current conditions hold, what does that look like? Because the projections do not factor in ongoing stablecoin accrual, even though that's exactly what's happening. So in this tab, I've done just that, and I've modeled out assuming that we continue to generate 150K worth of stablecoins and then immediately pay that off on our Rari Pool 7 loan. What does that look like? So again, this assumes that we're putting those funds towards that loan until it's paid off, which currently is looking like January, February, at which point there are no additional assumptions beyond that about stablecoin accrual, because it just feels like too much of a stretch. We don't know what market conditions will be, and we don't want to assume that. But this is a fairly realistic scenario, and one that does put that pesky loan 7 to bed. So, and of course, it does also take into account that reduced budget, the post Keep Key budget. So, in this scenario, we're looking at out to September of 23, so yeah, basically an extra month here. And again, we're not assuming any stablecoin accrual beyond February. That very well might not be the case. We might be able to continue bond programs or anything like that. But anyway, that's kind of where we're at with respect to the runway. Yeah, well said, John. Even small reductions in DAO costs can make a big difference over time. They really do. If you extrapolate changes out month over month, and you stretch out the time horizon, those changes can really make themselves felt. On the flip side, with the Pool 7 loan, we see that pernicious impact of good old compound interest, which when you're earning the interest is great. When you're accruing interest on a balance, it's not so great. So hence the desire to pay that sucker off. Okay, so next on the agenda, I just wanted to do a quick update on the tribe redemptions front. So this has been pretty interesting because people tribe holders, namely, can redeem their tribe, send in their tribe into a contract and receive tokens that Rari holds. And of course, Fox is one of those tokens. At the onset of all this, and you guys might remember, there was a lot of sort of discussion about how we should handle this, but because of the liquidity as service program, there were 15.3 million Fox in that contract and held by that DAO. So kind of fast forward, it's that redemption contract has been live for, gosh, at least I think about 3 weeks now. It's been live for a while, and we're kind of seeing just a steady trickle of people redeeming their tribe. I think any of the major whales that wanted to do that initially have done so. So every day that number trickles down a little bit lower, but right now there's still 11.1 million Fox in that contract. I'll post that link real quick here. You can look on Etherscan. Again, that's the beauty of the transparency of the blockchain, is just being able to see exactly what's what here. Okay. So a really interesting point with all this is, like, there is a scenario where at some point people just aren't aware. I think it's realistic too. Like a lot of tribe holders just will not be aware of this for whatever reason. So there's probably a decent amount of Fox that may just get effectively frozen in that contract. No, I don't want to say burned, because that implies that it's actually done for and sent to like a burn address. But it's sort of interesting that to see this so far. I'm surprised there haven't been more redemptions by this point, but in any case, it's very interesting to see. Over on the bond front, we just had a nice discussion about this with the TMDC. Our Olympus bonds are still generating USDC, albeit at a slower pace. The average over the past week has been about $3,500. This is because the price of Fox is lower. We also have, if you look at the Dow Treasury, we have LUSD incoming. If you weren't familiar with what we're doing, that you might be confused. Like, who's sending us LUSD? Well, this is the bond protocol that we've had live for a while, and it's working fantastically well so far, I'd have to say. Right now, we're averaging like 9,000 a day, which is a lot. I think the target for this particular test was like 8,000, but we're approaching having to set up another a 2-week sort of tranche for this. And basically the target, the overall bond strategy as dictated by the TMDC, we were just talking about this, is basically to target 150K a month, and then put that towards our Pool 7 loan. So the guys at Bond Protocol have been super helpful with all this. There was a pause mid last week. I think we just started getting going again about 4 days ago. That pause was because a kind of a parameter was hit in their system. It was a debt buffer. It was basically kind of like a circuit breaker that happens when too many bonds are being sold. So this kind of prevents things from maybe selling too fast, or it kind of helps keep the system a little bit more predictable. But that has been redeployed, and it's nice to see LUSD coming in. Again, this is a more sorry, I got distracted. What was I trying to say? Oh, LUSD is a more decentralized variant of a stable coin, I think, than USDC, which is a very desirable property to have. We've been aiming to accumulate more decentralized stables in addition to our USDC. John says redemptions on Tribe will likely become asymptotic. Yeah, for sure. So they'll always continue to happen, but you got to figure, like, people that really want to redeem will probably have redeemed soon, and it'll gradually tick lower, but likely without any huge redemptions. We'll see what happens. One last thing, we have a TMDC allocation update. Josh put those numbers together. I actually don't have those numbers in front of me right now, but TLDR is the TMDC, which requested an allocation of an additional 60 million Fox. I think it was a month or two ago. Still has ample overhead on that. That would bring the total authorized up to 180 million. One thing that gives the TMDC more overhead is the fact that the Fox that was previously in our Pool 79, which was millions and millions of Fox, was a return to the Treasury, and thus credited back kind of in terms of how that's calculated for remaining authorized Fox for the TMDC. So cool, always cool to see those numbers, and thank you, Josh, for doing those calculations. So yeah, that's kind of the state of things right now. And that was my main chunk of topics. Before we jump into the ocean stuff, I want to pause real quick to let anybody voice any comments about all that stuff we just talked about. Okay. Right on. Well, let's jump into the presentation then. Let's get Ocean up here. There's also a Zoom that I believe you can find. Is this in the chat? Thanks as always to the mod squad for setting this up.
What's up, Kent? Can you hear me okay?
Yeah, how you doing, Ocean?
Doing well, thanks. Let me try to get the screen sharing set up too. Hold on a sec, I need to restart.
Cool, yeah, no worries. And then would somebody mind reposting that Zoom link in the... Oh, I see it here. I'll just make that visible. Thank you, Psychedelic and the mods, for getting that moving. So yeah, well, Ocean gets this set up just to put you in the right frame of mind for this. You know, it's like we talk often about like modeling. You know, like we were just talking about the runway and like, okay, like how much, what can we really count on in terms of like stables given everything else? It's a little bit simplistic though, in the sense that we don't take into account like any sort of revenue, which makes sense from that sort of perspective, but it is also not very nuanced. And in this market, it's like the perfect time to be thinking about like revenue growth strategies and modeling that sort of thing. And that's precisely what Ocean has done, and just with a lot of nuanced analysis and a cool spreadsheet.
Thanks, Ken. So as I'm going through this is certainly meant to be an open discussion. So I would love to answer questions, have people interject through the chat or just coming up on stage. So Kent, if someone raises their hand, feel free to throw them up here and we can chat through it. And then hopefully at the end, this will incite more conversation either in the Discord channels that have been set up recently around some of the strategy stuff, or just generally thinking about kind of the DAO as a business. And that's really the purpose of, I think, what I'm trying to do here is like we have this opportunity now post user migration to pause for a minute and to have all of us critically think about the DAO. You know, a lot of times I think it's pretty easy for all of us to get siloed in our different areas of the DAO. And, you know, we don't have a executive leadership in a DAO, right? So like it's all of our jobs as token holders to fill that role. And so I think hopefully this will give us some shared context to have the next set of conversations that I think are coming about kind of what is next. So that's the purpose of what I want to present, is just that shared understanding. The model that I am presenting is meant to be kind of as simplistic and unbiased as I could make it. You can feel free to fork it. So if you just come in here, and I can post this link too in the chat so people can open it at home. And you can just do file and copy, and then you can edit this however you'd like to change some of the assumptions and a bunch of the variables to kind of suit your own bull or bear case. But as it stands right now, it's I'm trying to present something that is not assuming the worst and not assuming the best either. Yeah, so that's a little bit of background. Just how this started was originally DeFi had suggested that we create some sort of unit economics type model for users. And I believe that there was some work done early on that didn't quite get to completion. And then I started talking to Diggy a while ago about some of the goals that she was presenting for the product workstream and kind of overall growth of the user base, and really started to ask the question of what are the right goals, right? Is 15% month over month growth, which was the number that was getting kicked around, does that land us in the right spot? Is that what we should be shooting for? And at that time, it was kind of a not answerable question. At least I couldn't find the answer to it. So that precipitated the creation of this spreadsheet and kind of what we'll go over today. So there's some basic assumptions that have been made in this, and I think it's worth calling them out. Again, you can change those assumptions if you'd like, but in this model, I took, assuming that we were going to take all of the trade volume that we were seeing on legacy platforms, and that would all come over onto the new app.shapeshift platform. So for the trade numbers, I used the 0x tracker, which was functioning at the time. It looks like it's down now. So yeah, but that's where the data comes from for the trading volumes. Other pieces were taken from similar links, which you can find the staking revenues for things like Yearn are theoretical. We haven't received any revenues from Yearn yet because it's been so low. And that same thing with trading revenue. It's assuming that we do end up with affiliate revenues through CowSwap, which is not yet in place. But if that falls through, there's other options for integrating maybe 1inch or some other trading partner. So know that the revenues for some of these things aren't actually in place yet, but we have a good idea of what they would be. And then it's assuming that our expenses are going to remain flat, which is a very conservative assumption, well, the other way around, right? Basically saying that if we end up in a place where we have hundreds of thousands of monthly active users, we're not going to need additional support, scaling infrastructure, engineers, etc. And to keep things as simple as possible, keep queues left out of the model. The bond sales are not included, and I can talk about why that is in a minute. But that's the basic assumptions that went in. And then in this section, there's just some constants that get applied here. So 10 basis points was an assumption of what the affiliate revenues would be through something like CowSwap or 1inch affiliate program. We looked at the fiat on-ramp agreements and came away with a rough idea that for every dollar that we went to the on-ramp, we received about 45 basis points. For the staking contracts, they have both Idle and Yearn were analyzed for this, and they have very similar structures where they basically charge 2 and 20 fees to users. Of that 20% of that performance fee, basically, they provide 5% as an affiliate fee. So with yields being very low, unfortunately, right now in DeFi, you end up with about 4 basis points of profit for every dollar that goes into something like Yearn through us. And then monthly expenses, this was based on the latest estimates that Kent provided and this is, I think, includes the exclusion of the Keep Key work stream. So our expenses are higher now, but this is, I believe, the estimate starting around December for what we'll be spending. And then, just the current stable treasury. So going through this, the kind of important thing is that we take whatever revenues we believe to be today and just continually scale them month over month by 15% and kind of can figure out where that lands us in terms of revenue and also our burn rate and then what that means for the treasury. The monthly active users right now, I think it's closer to like 10,000, and it actually doesn't quite matter because we more so are focused on the revenue here, but it's good to at least have those numbers to see what they would look like for if we did scale 15% month over month for 12 months where we would end up. So right now, this is kind of the, I would say, like base case for what's going on. We're shooting for this growth factor of 15%. And you can see that basically after, I don't know, kind of similar to what Kent was suggesting in his spreadsheet, that we have something like 12 or 13 months of runway before our stable charge rate goes to 0. So the question is, when do we end up being revenue positive, and how much time do we need if we don't change our expenses and we are able to hit 15% month over month growth? And that would be somewhere where we start making more every month than we're spending, about 21 months out. And we actually start seeing money. We're not in debt anymore, if that was a thing for us at kind of 26 months from now. So that's, let's see if there's a comment on the stage. Yeah, so great question, Apotheosis. We've actually not been growing at all from what we can tell. So the 15% is definitely a target and not current reality. So this is, again, where you can play with this model to kind of come up with some different scenarios. You could very easily put into here, well, what happens if we only hit half that growth rate and do 0.075? And you can see kind of where that lands us, which is not in a great spot. You can also change a monthly spend, right? Which was what just was talked about with the key work stream going away. And I think that that's really important for us to consider too, because that is a really great place where we can change the trajectory of these outcomes. So instead of $280,000 a month, if we were to reduce our burn to $200,000 a month, and leave the 15% growth factor in here, you can see that we do theoretically survive. So I don't really want to be prescriptive with this yet, but I just think it's really helpful for us all to have that context. There's some other assumptions in here that people might argue are right or wrong, and that's why you guys are super fortunate. You can change it as much as you'd like. Pause there for some questions. Let's see here. Willie, maybe you would be best able to answer Pasta's questions around monthly active users at centralized Shapeshift. I'm not sure who else would have that data.
Right before decentralization, we had like 150,000 monthly active users at our peak. Oh, pre-KYC. Yeah, we didn't have users pre-KYC, if that's what Pops is asking. But we were doing quite a bit of volume. And I think in our peak months, right, Shapeshift did about $1 billion of volume almost in like December 2017 or January 2018, around that time period. And then bear market kicked in and we were doing less and less volume. Maybe John has numbers for how much we were doing right before we implemented KYC. But then as soon as we implemented KYC, those numbers dropped significantly and never came back. Nice. I see CFO Scott typing. He'll have some good data on this.
Awesome. Thanks, Willie. So I think it's really important to highlight a couple different things here, and then I can talk a little bit more about the bond sales stuff. But there's certain things that drive user growth to the platform, right, that may not generate revenue directly. I think if you look at this and you see the revenue from staking, like this is staking into a urine vault, for example, where they revenue share with us, even when we achieve very large numbers of users, I don't even 500,000 monthly active users, the revenue is still very small from something like staking through urine. Whereas the on-ramp revenue is much higher. If we can scale the validator revenue, obviously also very high as well. It doesn't necessarily mean that those are like bad strategies. It just means that they're user acquisition strategies and not necessarily revenue generation strategies of their own. So like one of the things that have been encouraging us to do, and I know others have as well, is just making sure that we're really clear on, the investments we're making, the expenses that we're going to incur from those, both from an operational expense standpoint and just the engineering expenses to implement them, and what that might mean for the DAO's bottom line as a whole. So yeah, hopefully people can follow this. Again, it is meant to be kind of as simple as it could be, I think. Happy to answer more questions about it. But I also wanted to talk a little bit about the bond sales and why I chose not to include them. Let's see if there's any other questions or anyone wants to pop up on stage. All right. Cool. So the last thing I want to just touch on was why.
Scott jumping up here on stage. Hey, Scott.
Hey, Scott.
Hey, guys. Go ahead, finish your thought, Ocean.
Yeah, so the last thing I just wanted to show was the bonds and why I don't think they're necessarily sustainable and why I chose not to include them in this model. So I think most people probably are familiar with how the AMMs work, right? That they have this constant product formula, which is X times Y equals K. So X is the first asset, Y is the second asset, and then K is this invariant. That is what keeps it constant in terms of the assets moving together. So like you can create a very simplistic model for what our bond program does to our liquidity pool, and thereby the price of our Fox token. So right now we're, I think Ken's saying we're trying to target around 150K of USD per month. And you can end up figuring out what that means for how much Fox we'll need to sell and what that does to the Fox price, assuming that there's no additional buy pressure to offset it. So just like a flat market, that the ETH price is stable. And then also we've seen that most of these bonds are simply arbitraged away by Fox holders. So meaning that someone who's already holding Fox purchases the bond, immediately sells Fox they already own, and then waits for the vesting to occur, rinses and repeats over and over again. So right now, this might be a little stale, but Fox price is right 4 cents. When we do a month worth of bond sales, with no other factors included, we should expect the Fox price to decrease about 11% based on the AMM math. So that's really important to consider just what that means to the entire treasury of Fox. And if you think about the fact that the DAO has about 420 million worth of Fox on its books, that reduction ends up actually costing our treasury as a whole like $2 million. So this is probably a little exaggerated. I know Kent would have a different view on this, but if we view the treasury holistically, which I think we should be, at least in some areas, there's a really high cost to these bonds. So feel free to play with this also. You can tweak it as much as you want, think about it differently. But one more reason where I think we really need to think carefully about how much bonds we're selling, especially given the current liquidity of our pool, and how sustainable that is.
Yeah, thanks for that analysis, Ocean. I think it's interesting to note that sort of like one strategy and kind of what the TMDC is pursuing right now is taking that 150 of bond sales, applying it towards the loan. It seems to make sense to at the very least get that loan paid off, and then sort of and this is just my humble opinion, but kind of reassess where we're at in terms of runway. You made a really good point. It's like the DAO has to be able to find other revenue sources. The desire or the goal is to not just sell Fox. That's not sustainable over the long run. We have to become an organization that earns revenue and is profitable. And it's helpful to see these numbers here on the spreadsheet. Scott, did you have any thoughts about this?
Yeah, I just had a couple clarifying questions. If we can go back to the 15% goal tab. So Ocean, on this spreadsheet, if we just go to the first line, line 21, sort of our base case, and we compound from there, are we realizing these numbers to date? Like in other words, are these a realistic representation of the last month, 2 months, 3 months average of the last quarter?
So for certain areas, they are, and certain they're not. So and I can just walk through it real quick because it's not that complicated. The trading revenue, this is assuming that we had affiliate revenue in place, which we do not today. It's pending with cow swap. So that is not there as of today. But this volume, when the 0x tracker was working, was the volume. I think this was in August or September. So that was a real number. This on-ramp volume was estimated based on the data that we did have. And I do believe we are waiting to sign an agreement for the on-ramps to allow us to access those payments. Willie may have better insight there. This validated revenue is actually coming in. So that's real revenue. We actually have, the paper trail for, and you can see it on chain. The staking revenue is theoretical. They haven't paid us since the volume is so low.
Thank you for that. And then the other question I have is more of a generic question on the business model itself. And I apologize if this is already out there and I'm just not aware of it. Have we as a DAO agreed on the approach to revenue generation, and is that specific approach factored into, for example, our product roadmap and our marketing plan, etc.?
I can't speak on behalf of the DAO. I'll just give you my take on it, and certainly this is just my opinion, but it seems like we've been marching down a path, whether that's been explicit or implicit, for the last, since inception of the DAO, or at least since I've been here. And I think right now it does seem like there is community sentiment to at least analyze that, right, and to take a good hard look at it. So I don't know that it's stated that this is our business model, and and it's been voted on or anything like that. But it's just kind of been, I think, the way that we've all been operating as of date today.
Got it. And I think when I look at this, one of the things that I struggle with is, what are our objectives vis-a-vis the revenue piece? And this is rhetorical, by the way. What are our objectives vis-a-vis the revenue piece? How does that factor into the model? Are they reasonable and obtainable? And then the second question is sort of take those same exact lines of questioning and apply it to our runway. So is it reasonable? And then is it reasonable within the time frame we have, which is essentially predicated on the amount of funds we have in our treasury, which is, Fox and stable. And I think it becomes really interesting when you model this, because once you, and I'm oversimplifying this, but once you burn through your stables, you in theory have you could argue a potential downward spiral related to the price of Fox. In other words, it could decrease at an increasing rate, to the extent that we start allocating more of that to fund expenditures, if that makes sense.
I think that's precisely the best argument for having trying to maximize our stable runway, is avoiding that potential death spiral scenario in the price of Fox, because that could be quite hard to recover from.
Yep, a very good point.
And then Postigos, I think you had posted a question on pre-KYC stats. I'm not sure that what we have related to that. We can certainly take a look at it, but more importantly, I'm not sure how applicable it is, because the question that I would have back is, has that ship sailed, and can you even remotely achieve what you were doing pre-KYC in 2018? And that's a totally separate topic, but we can certainly look into what information we have to at least come up with goalposts.
Awesome. Well, definitely really appreciate everyone giving me the time to present this. I'm happy to answer more questions on it. I'm going to set it back to what it originally was here, and feel free to, again, pull it down and play with it, see, what assumptions you want to change and what you think. I think ultimately, again, like all of us as token holders are the executives here, and we have to make some decisions about what we think is the right next move for the DAO, collectively. So I look forward to those conversations and figuring out the path. And hopefully, this tool helps people to think about that stuff. And yeah, happy for feedback on it. If people want to see other things added to it, I certainly would consider working on it more.
Awesome. Thanks for putting this together, Oxean. And it really is a helpful tool as we ponder this stuff. It's interesting timing, as GK just pointed out as a reminder in the stage chat. We're having these big picture strategic discussions right now in that new channel, and having hard data to look at, whether it's like actual data or also just like realistic and easy to analyze projections is really important. That way we're not just throwing something at the wall and hoping it sticks, or praying to the crypto gods. That is, even though I think all of us might do that with respect to our own crypto portfolios, that is not a tenable strategy for the DAO. So yeah, and I'm also excited to see kind of how this spreadsheet evolves over time as we have more data, and as maybe we hopefully actually start to increase our growth rate and our user base. If anybody has any questions, Oxean, on this stuff, should they just ping you directly, or do we want to create like an actual channel to discuss this particular component?
I mean, there's one of the tokenomics public channel, or one of the newly created strategy pieces would be great. Yeah, just making sure to keep everything public as we can and get everyone input would be great there.
Yeah, public tokenomics might be perfect for that, since this does relate to that component. Although interesting crossover with product as well.
Yeah, definitely. And the last thing I'll just say in closing, like I'm still super bullish on the DAO in general. I think we have the talent here that we need to figure it out. If, I've said this before to a lot of people, but like if you were a startup and you had $3.2 million in the bank, bear market or not, you'd be absolutely psyched. And I think that I think we have some challenges, but I think if we come together, we can absolutely solve them and find a way of generating revenues that make this thing sustainable.
Well said, man. Very well said. Also, I share your bullishness, and also just seeing the community here. Look, we have 33 people here, plus us on stage. Like, people are hanging out. They're not just evaporating into the ether because it's a bear market. Like, we have a community that is really committed to this vision, and it's being tested and has been tested through this bear market. And I know we're going to emerge stronger, and with a stronger culture, a stronger community, and having been tested by these bear market fires. We're going to make it for sure. Any final questions or thoughts as we wrap this up? Looks like there's still some more discussion in the stage chat. We should probably just keep that open afterwards so people can continue to hang out. And yeah, again, if you guys have thoughts around this piece specifically, as relates to the DAO strategy, link it in there. You can talk about it, or just discuss it in the public tokenomics channel. So, yeah, with that, I suppose we can wrap it up. Thank you guys for listening. It's always a pleasure, and I seriously, I come out of these talks so optimistic, just to be surrounded by all you awesome contributors, and it's just so much fun to be fighting through this bear market with you guys. So have a wonderful rest of your day, guys, and I'm looking forward to seeing everybody's thoughts in the strategic discussions that will play out in the days, weeks, and months ahead. Have a good one.
Thanks, Kent. Thanks, CFO Scott, for hopping up here. Bye, everyone.